Ladies and gentlemen, good day and welcome to the Indoco Remedies Limited Q1 FY2024 result conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from JM Financial. Thank you and over to you, ma'am.
Thanks, Rico. Good afternoon, everyone. I'm Cinderella Carvalho. On behalf of JM Financial, welcome you all on the Q1 FY24 earnings Concall of Indoco Remedies. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to host the call. I'm looking forward to an insightful interaction on the earnings with the management. Today, from the management team, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Pramod Ghorpade, Chief Financial Officer. I now hand over the call to the management for their opening remarks. Thank you.
Thank you, Cinderella. Good afternoon, all participants. I am Pramod Ghorpade, CFO for Indoco Remedies Limited. We appreciate all for taking out time and joining this call today. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are projections or estimates about our future events. These estimates reflect the management's current expectation of future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Now I will request our Managing Director, Ms. Aditi Panandikar, for her opening comments.
Thank you, Pramod. And thank you everyone for joining us this afternoon. We closed the first quarter of financial year 2023-24 with a consolidated sale of rupees 413 crore, of which domestic formulations business contributed to 213 crore, international formulation business contributed to 160 crore at a 39% of total sales. API business contributed 36 crore and the remaining 5 crore came from contract research and analytical business put together. Our API business has recorded an 170% growth in the first quarter of this year. We recorded for the first quarter an EBITDA of 63 crore, which is at 15.2% of sales. We are continuously working on various strategies to improve revenues and margins in all our business segments. On the domestic front, we are focusing on sales force effectiveness, new product launches, exploring new channels of distribution, and increasing our reach in certain areas which have growth potential. It is worthwhile to mention the following developments in the organization which have provided substantial impetus to our growth strategy. Number one, the warning letter on Goa Plant 1 was lifted and we received an EIR from US FDA. We now expect to launch a few more solid oral products from this site for the US. Number two, our Baddi manufacturing site, Unit 3, received EU GMP certification from the Health Authority of Germany, thus enabling us to supply to the EU nations from one more additional and more efficient site. Number three, we have been working on gross margin improvement plan across the organization, across geographies and segments. And last but not the least, as part of our digitization journey, we have given Apple iPads to our field force to help them convey the message more effectively in the doctor's chamber. We have started an AI/ML project on machine automation. We are working on a document management system as well as an HRMS system for efficiency and effectiveness of human capital. On the international front, I'm happy to share that Indoco now has a front end in US with the acquisition of FPP of Florida Pharmaceutical Products, a distribution and marketing company. This is all from me. I will now hand over to Mr. Sandeep to share the financial highlights of the first quarter.
Thank you, Aditi. Good afternoon, everyone. Hope you all are doing fine. Let me first begin with the business highlights. Net revenues of the company for the first quarter grew by 5% at rupees 413.2 crores compared to rupees 394.9 crores for the same quarter last year. EBITDA to net sales for the quarter is 15.2% at rupees 62.9 crores compared to 18.1% at rupees 71.3 crores. Profit after tax to net sales for the quarter is 6.2% at rupees 25.7 crores compared to 9.5% at rupees 37.5 crores. Earning per share for the quarter is rupees 2.81 compared to rupees 4.17 for the same quarter last year. The above numbers are on standalone basis. We have declared results with consolidation, which includes results of subsidiaries. Now on the Indian pharma industry. The Indian pharma market is valued at rupees 51,423 crores and has registered a growth of 8.5% during the first quarter of FY2023-24 against similar first quarter for last year. During this quarter, Indoco registered a sale of rupees 300 crores with a growth of 2.8%. In the IPM, Indoco ranks 31st in the first quarter FY24 with a market share of 0.58%. The source is IQVIA, April 23 to June 23. Domestic formulation business. Revenues from domestic formulation business for the quarter grew by 6.5% at rupees 213 crores compared to rupees 200 crores for the same quarter last year. Major therapeutic segments, namely stomatology, urology, cardiology, ophthalmology, and dermatology, performed well during the quarter as compared to the previous corresponding quarter for the last financial year. Now on to the international formulation business. Revenues from international formulation business witnessed a degrowth of 9.9% at rupees 159.7 crores compared to rupees 177.3 crores. Revenues from reg markets degrew by 9% at rupees 134.4 crores as against rupees 147.7 crores. Revenues from US business for the quarter degrew by 21.1% at rupees 51 crores as against rupees 64.9 crores. Revenues from Europe for the quarter grew by 2.1% at rupees 79.4 crores as against rupees 77.7 crores. Revenues from South Africa, Australia, New Zealand were at rupees 3.8 crores against rupees 5 crores. And revenues from emerging markets for the quarter degrew by 14.7% at rupees 25.3 crore against rupees 29.6 crore. The API business revenues for the quarter have substantially grown by 169.2% at rupees 35.7 crores as against rupees 13.3 crore. Revenues from Anacypher CRO and Indoco Analytical Solutions have grown by 12.8% at rupees 4.7 crores against rupees 4.2 crores. That's all about the business highlights for the first quarter, and I now request the participants to put forth their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity and good afternoon, everyone. first question, Sandeep sir, on the OAI that we have, is that only on plant 2 in Goa, or is that on plant 2 and 3?
Good afternoon, Aditya. Plant 2 and 3 are part of one FEI number. So as of now, it is for both these plants.
For both these plants. Okay, ma'am. And this FPP acquisition, is it consolidated during the quarter in our numbers, or is it not consolidated?
So we got 1 month in this quarter, Aditya. So a very small amount of revenue has come in, which is part of the consolidated results.
So it has been consolidated for a month, therefore?
Yes.
Okay. And given that we have an OAI on 2 and 3, and therefore we will not get approvals till we resolve this, how do we plan to leverage the FPP acquisition? Would Brinzo and Combigan basically be launched through our own front end now that we have it, or will those products continue to be in partnership with our partners?
So Aditya, OAI on plant 2 does not have any impact on current products which are already being supplied to US, many of which are our own ANDAs. On some products which we have got back from Teva, we are considering actively front-ending them through FPP. We also have a couple of solid orals in US market, which we were currently doing through other partners, which we intend to bring in.
And how much time would it take, ma'am, to shift the partner from an external partner to internal?
Not more than 3 to 4 months.
Understood. And regarding the OAI again, how much would be the remediation cost we have incurred in this quarter, and how much do we expect to incur for the full year?
About 4 crore is the remediation cost incurred this quarter.
And what is the estimate for the full year, ma'am, if you could share?
About the same per quarter.
About 4 crores each quarter. Right. One last question, Sandeep sir, on the US business, sequentially our revenue is down despite consolidating for a month of FPP. Our revenue is down from 71 crores to 51 crores. And if I remember correctly, we also must have launched the larger SPU of brinzolamide, which was supposed to be launched, I think, in April, if I'm not wrong. So what explains the decline in revenue in US despite the launch of a very large product like Brinzo?
So Aditya, I'll just briefly answer this, and maybe details we could take offline in a call with you separately. But roughly, just to tell you, the impact of the OAI on US business specifically has been quite simple. Some of the milestones we were to receive from clients for products made at this site, those have got postponed. Also, there was some, post-OAI, you have to communicate with all your customers, and it's a regulatory process in which they do risk assessment and then lift the product. So there has been some supply delay in this quarter. Some of it will come into the next quarter as well. So those are largely the reasons why there was a dip in US. For your other questions, I think it is not correct for us to speak of it on this call here, and maybe we can take it later.
Sure, ma'am. Thank you. I'll get back in the queue.
Thank you. Our next question is from the line of Deepan Sankara Nayaranan from Trustline PMS. Please go ahead.
Thanks a lot for the opportunity, and good afternoon, everyone. So firstly, on the domestic business, so what is the reason for strong growth in stomatological business? So was it due to new product launch, or we have seen market share increase? And do we expect this growth to continue?
Yeah, hi. So, good question. Yes, the increase in market share and robust growth in all the toothpaste as well as most of the products in dental is a welcome sign this quarter. And this is on account of, we had shared, I think, in earlier calls that we are exploring alternate channels for distribution in India market. So there has been a good support through digital media for promotion of some of these products. And we have also set up a direct-to-consumer channel for facilitation and in order to make the products better available across counters. I think we are seeing early signs of success through these.
Okay, good to know that. And ma'am, also this anti-infectives and respiratory business sales has reached almost closer to pre-COVID levels. So do we foresee growth in these segments in future? Because excluding these two therapies, I think we have delivered such a strong growth in domestic business.
Yeah, correct. Probably anti-infective and respiratory have been the most challenging two therapies to predict for performance in the last 3 or 4 years. Initially, of course, there was impact of COVID. After that, they got a huge tailwind when they were used in treatment of COVID. After that, some peripheral antibiotics and other acute products were also used to treat the second and third wave of COVID. So there doesn't seem to be any kind of normalization, frankly. But your question is true, and I feel this is really and truly a pre-COVID. So technically, I think we have given a 10% growth on a pre-COVID year at this point. And but it doesn't take away the fact that in a normal year, if the season comes in, we could have done better. This year, as you know, the monsoons have got delayed by almost a month. And therefore, in the first quarter, we see marginally that impact. If Q2 lives up to its expectations, especially with the season coming in as it is now, I'm confident we will be able to show growth on these two categories as well.
Okay. And also this urology as a segment now doing quite well over the past year, three times up. So are we doing anything special there, or this growth run rate could continue well there?
So we have a very popular brand called Cital, which is a urinary alkalizer, which is used in the summer seasons by people who are prone to, burning micturition or kidney stones, and specifically as a treatment option and to prevent the problems in extreme heat conditions. So this year we had a long summer, a tough summer, and Cital has done well. But in addition to that, we had launched an extension to Cital, a brand called Cital UTI, to be used in urinary tract infection, which has also done exceedingly well. And I'm happy to share that these two brands have done very well this quarter, and in fact have contributed second only to Cyclopam, the main brand of the company, for contribution. We expect both Cital and Cital UTI to do well, but of course they will have this kind of a seasonal impact and will always do better in the summer season other than the others.
Okay. Thanks a lot, Sam. I'll come back in the queue.
Thank you. Our next question is from the line of Mr. Rajat from InCred AMC. Please go ahead.
Yeah, hi. Thanks for taking my question. So, ma'am, firstly, on your employee expenses...
Mr. Rajat, sorry to interrupt. May we request you to use the handset for optimum audio quality? Thank you.
Yeah, is it better now?
Yes, sir. Please go ahead.
Okay, yeah. So just on the employee expenses, they seem to have shot up by roughly 10 crores on a Q-on-Q basis. Just wanted to understand what is this, how has this gone up? Like, any explanations on that?
Yeah, so about 3 to 4 crore is on account of arrears. We had an agreement which got signed off at the Goa site. So that is one time. And some of it is on account of regular increments given during the year. It is becoming a little tougher to keep people with you, especially because of the high attrition at starting levels. And some amount of salary growth has also been taken. So roughly, I think a base of around 85 to 86 is what should be considered as a regular employee cost quarter on quarter.
Okay, so 4 crores you're saying is the one-time impact.
Yeah.
Okay. Ma'am, secondly, on just the domestic business again, so last quarter, if I remember correctly, you were guiding around 12 to 13% kind of a growth versus that you have delivered around 6%. As you said that there was an impact of delayed monsoon. But going forward, do you think you will be able to deliver the 12-13% kind of a growth on the overall annual number to cope up in the next quarter, or do you think we'll fall short of guidance?
So, quite honestly, if you had asked me this end of next quarter, I would have feel happier giving you a response, because the biggest quarter is underway for us. And if you look at industry also and its performance, I know you know the IPM numbers, but if you look at our covered markets, they have not fared very well. As so covered markets have grown at just 6% as per IQVIA. So we are in tandem with the covered markets. Domestic business has grown by more than 6% this quarter, and I'm hoping that we will be able to catch up, at least to get to a lower double-digit growth, if not more, for the year.
Okay. And ma'am, on the FPP, can you would be the costs associated with this in terms of employee costs, which we should work with going forward incrementally from here?
Yeah. So we have a limited number of employees at FPP in US, which requires for our overall operations there. So overall cost level which we look for and what we have factored during our due diligence and further during projections, it's about $4 million on annual basis.
4 million is the acquisition cost.
And overall
operating cost will be around close to
$2.5 million is the running cost.
Sure. Okay. Thanks. That's it from my side. Thanks.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Abdul Qadir Puranwala from ICICI Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just also on the guidance front, I think previously we had guided for around 18% kind of a margins for FY24. So are we retaining those, or what is our margin guidance now?
We feel pretty confident that we'll be able to, for the full year, go up to 17.5%.
Okay. And in terms of US, so because of the OAI, is this OAI going to impact our allopurinol sales, which is there from Plant 3? Because I think in FY24 we expect a sizable number in terms of revenue coming from that product itself.
No, as I said earlier, no running products are getting impacted in any way. However, additional to Plant 3 supply, with the VAI on Plant 1, we are able to also get allopurinol manufactured at the other site. So, in fact, you will get incremental impact on that product sale going forward.
All right, understood. Thank you so much for answering my questions.
Thank you. Our next question is from the line of Mitesh Shah from Nirmal Bang E-Securities. Please go ahead.
Thanks for taking my question. And again, I have a question on the US front. So is that any of the revenue we lost because of this OAI, or it would be like normalizing the growth going forward? I mean, I just want to know about the guidance for the US for FY24 from you.
So, as I mentioned earlier, I'll just repeat. There has been a delay in clocking some sales because some customers did not pick up products right away post OAI. But after that has been resolved. So there is a delay, certain amount surely. Regarding some milestones to be collected, those have got delayed by a couple of quarters. Consequence of which, overall guidance of US for the whole year, we are going to have to take some amount, look at it again. But I feel pretty confident that we will try to do excess of, in the range of 280 to 300.
Got it. Thanks. That's it from my end.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Mr. Vishal from Systematics. Please go ahead.
Thanks for the opportunity. Hope I'm audible.
Yes, sir, go ahead.
Yeah. So my question is, in the US, do we expect any new launches, and do we also expect Combigan to be relaunched in October as guided earlier?
Mr. Vishal? Hello? Hello?
Yeah, I think, although his voice was very faint, I think he was asking about Combigan supply in the next quarter. Is that it?
Yeah, so I was asking whether we can, do we expect to supply Combigan in October as we guided in the previous quarter?
Yeah, so consequent to this OAI, there will be probably some amount of, back and forth with our front-end partner, Teva, on this. And we'll come back to you with impact on this launch.
So, Madam, just so your guidance is about 280 crores for US in this financial year, and we are at 50 crores in the first quarter. So that implies we hope to do about 80 crores. About 80 crores in the next 3 quarters per quarter.
Yeah.
What would kind of help us ramp up from 50 crores to 80 crores? So would this be existing products or new launches?
So both. There will be few new launches from the other side, solid orals. There will be a substantial increase in production of currently manufactured products from plant 2 as well as solid orals being supplied from plant 1. And the ramp up from 50 to 80 may not happen immediately in Q2. It will be a slow growth. The guidance is for the full year.
Okay. So probably we'll see the ramp up happening more towards Q3 and Q4.
Yes.
Okay. And in Europe, apart from allopurinol and paracetamol, which are the key products there, do we expect further new launches there? And should we expect a ramp up from the current run rate of about 80 crores in Europe?
Yeah. Hi. In Europe, we have got a number of molecules. I'm not at liberty to disclose all the names of the molecules, but there are at least 12 molecules besides paracetamol, allopurinol, and cetirizine, which we are selling right now. And definitely, Europe annual guidance will be in the range of around 375 to 380 crores.
Okay. So the Europe run rate should also pick up from subsequent quarter.
Yes.
Okay. And on the remediation, would we how long will we take to do the remediation for the unit 2 facility?
So that typically depends on how FDA looks at our the strategic proposals that we have sent them. We are also at this time having constant communication back and forth with FDA, hoping to have a face-to-face or online call at some point to clearly understand their position and concerns because with 4 observations we had not expected an OAI. So given that most of the remediation costs at this stage to give you a full guidance on how long and what would be a little premature because we have to first understand what it is that they're looking at. If our assumptions are correct, then I think we are looking at least till the end of this year.
Okay.
3 more quarters.
Got it. Okay. And just one more on emerging markets and API. So emerging markets was quite weak this quarter and API was very strong. So how should we look at these 2 businesses for the rest of the year? Will emerging markets revive and API business can sustain the momentum?
Yeah, I'll talk about the emerging markets. Q1 of this year was a one-off quarter, and emerging markets order book is very strong, and we are very, very confident of turning this around. This was a one-off quarter, and particularly because we had done extremely well in Q4 of last year. But from the second quarter, you'll see a dramatic turnaround in emerging markets. And coming to API sales, definitely sustainable throughout the year.
Got it. Thank you. That is all from my side.
Thank you. Our next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity. Most of my questions are answered. Just trying to understand, what is your revenue guidance for this year, given this OAI on one of the facilities.
We can't hear you. I'm sorry.
Mr. Rajesh, may we request you to use your handset for optimum audio quality, as you're not audible, sir.
Hi, is it better now?
Slightly. We'll try and understand what your question is. Let's see.
Okay. I am just asking about the revenue guidance for this year in light of the OI that we have received in one of the facilities. So that's what I was just trying to ascertain.
Yeah. So the OAI will have some bearing on revenues only from US market and will not impact any other market in any way. So I think we already said on the call that we are looking at close to 300 crore revenue, between 280 and 300 crore to come from US in total. But other than that, no other market gets impacted. US marginally. So that's it.
Right. So I heard that guidance for the US. I was just trying to understand for the whole company, are you changing anything else, or if not, what was the original guidance and what is the current guidance?
So we had not given any guidance this year, especially because we were expecting from the growth perspective, India market to be very topsy-turvy. And as we have seen, this first quarter, India has grown at close to 7%, I think 6.6. And I'm expecting by end of the year to be able to do close to 11-12% minimum growth on India business. Other than that, Europe, we expect good robust growth, again in the lower double digits at least. API will continue this kind of contribution. So that is, I hope that answers your question.
Right. And just to clarify, that helps. Just to clarify, you're saying domestic will be 11 to 12% for the whole year. Is that right?
Yes.
Okay. Thank you. Appreciate it. That's all.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Candice Pereira from Daulat Capital. Please go ahead.
Hello. Yeah, I just had one question regarding the EU market. So for this quarter, the growth was quite low, just 2.1%. So I just wanted to know the reason for that.
Yeah, hi. This, as I said, was a one-off quarter, and you will see sustained performance of Europe going forward, because both the Baddi plants have got approval now from EU, besides the UK. So they are free to supply to all the EU countries. That's the first point. Second point is batch sizes have been enlarged in those two plants. And not only will there be effective good top-line growth, but effective profitability because of the increase in batch sizes and efficiency built in. Also, the order book for Europe and UK is very, very strong.
Okay. No, I just wanted to understand why was just this quarter low? Like, what was the one-off? If you're saying there was a one-off, what was the one-off?
We just come back and look at it, possibly if it was anything to do with the base of last year. Okay?
Okay. All right.
Yeah.
Thanks.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Mr. Rajat from Incred AMC. Please go ahead.
Yeah, thanks for taking my question again. Ma'am, just on the India business again, could you give some sense on how recently launched products are doing, especially on the chronic, subchronic side of the things?
Yeah, so I think this quarter we were really rescued by our subchronic and chronic businesses, to be honest. Among the smaller businesses, ophthalmology, Excel division is doing exceedingly well, consistently growing at 11 to 12%. The two dental divisions are also growing at higher double digit, 17-18%. And your question on new launches, if I have to tell you, new introduction contribution to first quarter, we got sales in excess of 6.5 crore, which is more than double of new introduction contribution last year, first quarter, which was only 3 crore. So on all fronts, other than
May I request the management? Ladies and gentlemen, the management line has been disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, the management line is reconnected. You can go ahead with your question, sir.
Yeah, I think I was replying to a question. I'm not sure how much of it came through, but I think we were on contribution of new launches, if I'm not mistaken. So for the first quarter this year, we have got 6.5 crore coming from new launches, as against 3 crore in the first quarter last year.
Yeah. So, ma'am, that brings me to my second point. I think on a quarter-on-quarter basis, for last so many quarters, we have been either growing at the industry rate or below the industry rate. This is despite the price hikes we would have taken, new product launches, foray into chronic therapies. But again, we have not grow above the industry rate. We would expect Indoco to be above the industry rate, given that we are build business. We already have good product portfolio, good brands in our portfolio. So I'm just trying to understand what is the gap, and does it have to do with your productivity, or is there a lot of attrition, or is it that your competition is itself getting very strong and you are not able to cope up with it?
You know what? It's a very long question, so I've lost you actually. What is your question specifically?
So I was asking you, ma'am, that for so many quarters, we've been either growing at par with the industry or below the industry rate. This is despite the fact that you would have taken some price hikes with the NLEM portfolio. You have forayed into chronic therapies. And
so I think, we are talking of Q1 right now. So I would be happier concentrating on these numbers and what they say. I will have to dig out and go back into all my quarters when I might have not met your expectation. So for the quarter one, as I explained, it is only about anti-infective and respiratory. For the industry, these are degrowing by 26 and 25% on quarter-on-quarter basis. Compared to that, we are much more stable.
Okay.
I hope that answers your question.
Yeah. And ma'am, secondly, on your EBITDA margin guidance, so you said 17 to 18%. So you have been factoring the $2 million of incremental cost from the FPP and the 16 crore.
Everything.
Okay. Sure. Thanks. That's it from my side.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I now hand the conference over to the management for closing comments.
Thank you everyone for joining us this afternoon, and thank you for a very interesting question. All of you have a good week ahead. Thank you.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.